We've all watched Bitcoin explode to new all-time highs, and we're all wondering when altcoins will follow. While a few altcoins have experienced explosive rallies of their own, most have continued going down and to the right. This has left plenty of investors wondering whether their altcoins are dead or just waiting to spring back to life. That's why today we're going to tell you what to look out for to figure out if your altcoins are still alive or not. My name is Lewis, and this is a video that you can't miss. Before we begin though, you need to know that I'm not a financial advisor, and nothing in this video is financial or investment advice. It's educational content intended to help you figure out if your crypto still has a pulse, or if it's flatlined. And if you enjoy content like this, prove it by punching that like button. Now, if you think that your crypto is dead, that's probably because you've checked the charts and realized that it continues to fall to lower lows, even on longer-term timeframes. However, this doesn't tell the full story. That's because it's common for crypto's price to grind lower for months or even years before exploding to the upside, especially altcoins. Believe it or not, those are often the cryptos that pump by 20x or more. This begs the question of how you could figure out if your crypto is dead or if it's about to spring back to life. The answer is to look at what's going on under the hood, so to speak. You could start by checking the project's on-chain activity, especially if it's a layer 1 or layer 2. You can easily do this by using a blockchain explorer. If you could see that the number of active wallets, daily transactions, and other metrics are rising, then this could suggest that price could eventually follow suit. If the crypto in question is a dApp, then you should be able to find information about it on sites like dApp Radar or DeFi Llama. Again, the same idea applies. If active wallets are rising or total value locked is increasing, the token's price could follow suit if those bullish fundamental trends continue. As a fun fact, fundamentals like fee revenue make for very strong narratives. In other words, people tend to start talking about these fundamentals when prices start to rise. This causes prices to rise even more, creating a positive feedback loop that can result in massive gains. The catch is that you need to make sure that people can actually buy the crypto in question. That's why you need to check and see if the coin or token is listed on lots of centralized exchanges, or at least on decentralized exchanges on a chain that's cheap, fast, and accessible, like Solana or Base. Speaking of which, if you're looking for an exchange to buy crypto, then you have to check out the Coin Bureau Deals page. That's because you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges. All you need to do is just hit that link in the description or scan this QR code. Once you get on the deals page, you'll see all of our offers across a range of exchange partners. Click one of the Sign Up Now buttons, and that should take you right to the deal. These deals won't be around forever though, so take advantage of them while you can, using the link in the description below or by scanning the QR code on the screen. Now, of course, a crypto project's usage and exchange listings depend heavily on whether the project actually has the runway to do these things. And just for context, runway refers to the amount of money that a project has to spend on development. Obviously, if a project has millions of dollars or more to spend, then it could probably do what it needs to get its price back up, whether it's build out a new product or list on a bigger exchange. Usually, this money comes from previous funding rounds, and you could easily track how much money a crypto project raised on sites like ICO Drops or ICO Analytics. If it raised just a few $million many years ago, then it probably doesn't have that much runway left. But if the project raised tens or hundreds of millions more recently, then it probably has a lot of runway left. And here's a pro tip. If you could see that the project raised more money even after its ICO, then this basically means that investors believe in its long-term potential and could continue funding it in the future as well. Put simply, it means that the project probably won't be short on cash anytime soon. It can deliver the catalysts that will pump up its crypto's price. There's just one huge caveat though, and that's that sometimes the runway that crypto projects have comes from selling their coin or token on the open market. Logically, this kind of runway generation can tank the price in the short term, but typically results in bigger gains in the long term as more products and services can be built out using that capital. For example, the Ethereum Foundation regularly sells large amounts of ETH, but the money is always reinvested to grow its ecosystem and develop Ethereum's core infrastructure. That said, if you see no reason why these tokens are being sold, then consider this a huge red flag. There must always be a good reason for a crypto project to sell its coins or tokens on the open market. And if you dig deep enough, you could usually find this information in governance forums. Next, how can you figure out if the capital the crypto project has raised is being put to good use? The answer is twofold. Check the activity of developers and the engagement of the community. After all, not all crypto capital is spent on development. A lot of it also goes to marketing. Thankfully, most cryptos are open source, so you could easily track a project's development by checking its GitHub. If you could see that there's a lot of developer activity, then that's a good sign. This should be easy to check by just scrolling down on the main page and seeing the amount of commits to each repository. Another thing to check is to see whether or not the team is still posting updates regularly on X, Telegram, or Discord. This ties into the community aspect. You want to make sure lots of people are engaging with these posts, lots of likes, comments, and shares. If nobody is paying attention, nobody will bring your coin back from the dead, no matter how killer its products or services are. Ideally, there will be lots of engagement and activity from the community relative to the amount of followers on various social media accounts. In a perfect scenario, you'll see that larger crypto projects and companies are also actively promoting your project. That's just because when your project starts making big announcements, there's a higher chance that they'll be noticed and taken seriously if they're being shared by other key players in the industry. Just remember that the announcements need to be something that the average investor could understand. A simple narrative like, say, a decentralized bank account or a decentralized Uber. Also, remember that this crypto needs to be accessible. It needs to be available on lots of centralized exchanges, or on cheap, fast, and user-friendly chains. And this relates to the next thing to look out for to assess your crypto's pulse, and that's its upcoming milestones. You should be able to find these by listening to interviews with members of the team, digging through the project's documentation, or by checking its blog posts. If you can't find anything, then check the crypto project's X account and search for words like roadmap or milestone. Another pro tip is that you can actually ask Grok to find these posts for you. That way, you don't spend hours sifting through random tweets, shitposts, and memes. The roadmap should have milestones that are not only meaningful, but also measurable. If the project has been posting about building something for months, but you can't find any evidence of development on platforms like GitHub, then that could be a red flag. Then again, though, many crypto projects opt to just post developer updates when it comes to new releases. On that note, you want to check and see how much traction past and future milestones are getting in the crypto media, not just on social media. If you could see that crypto media sites are reporting on past and future milestones for your crypto project, that's a good sign. It means that there will be more attention and investment in the future as those milestones come around. It goes without saying, though, that smaller crypto projects will struggle to get into the headlines. In this case, the main marketing mechanism will be social media, where promotion by key players in crypto will go a long way in bringing attention to the coin or token. And just to be clear, key players in crypto do not mean crypto influencers or celebrities. If you could see that your project has been pumped and dumped in the past whenever there's a milestone because of promotion by influencers or celebrities, then this is a bad thing, because it means that there's likely insider selling going on every time there's a big milestone. Ideally, you want the project to gradually rise up and to the right with each bullish milestone, and not be pumping and dumping on the way up or down. If you're unsure what milestones to be on the lookout for, here's a few examples. A new partnership or integration with another project, a new mobile or browser extension wallet, a new cross-chain bridge to a major blockchain, upgrades to a project's speed, decentralization, or security, or the project building its own blockchain and upgrading from a token to a coin, and so on and so forth. Now, you'll recall that price action can be deceiving when it comes to assessing whether a crypto project is dead or alive. Well, this works both ways. Whereas a crypto project whose price has been going down and to the right could still be alive and well, a project whose price has been going up and to the right could actually be a zombie. You see, sometimes crypto whales will manipulate the prices of smaller coins and tokens from dead projects. This is easy to do because dead projects typically have very low liquidity, making them hypersensitive to any buying or selling pressure. This means that it doesn't take much capital to drive the price up or down in a big way. The telltale sign of a zombie pump is if you see that trading volumes have been extremely low and then have suddenly spiked as the price shot up and fell down just as fast. This sudden pump can make the project appear on the top gainers section of exchanges and tracking sites, causing some people to ape into a pump that's destined to fail. This speculative knee-jerk reaction usually means people are buying the top, who are then left holding the bag. Speaking of which, you should know that a zombie crypto can pump if it's a token that exists on a popular blockchain such as Ethereum or Solana. That's because if ETH or Sol pump, the tokens on their chains tend to also increase in value simultaneously. The zombie project might also get a brief uptick if its niche gets into the spotlight. For instance, a tokenized RWA crypto that's dead starts rallying only because other tokenized RWA cryptos are rallying also. However, it usually doesn't take long for investors to realize that they bought a zombie, and when they do, the prices usually head right back down. So, we just covered some instances where the crypto might not be dead. But what can you do if you think that your crypto is truly dead? Well, unfortunately, there's not really much you can do. If you think that there's little chance of recovery, then maybe consider cutting your losses. Alternatively, you can put yourself out of your misery and sell your entire allocation. It's important to consider not only how much time you'll spend desperately hoping for a recovery, but also how much sitting on your dead project could affect your mental health. If this happens, there is a silver lining, and that's that everything you learned on the way will help you minimize the chances that you buy a dead crypto again in the future. Take the time to assess where you went wrong. Why did you buy the project in the first place? What warning signs did you overlook? And what lessons can you take forward into future investments? At the end of the day, we all make mistakes, and a bit of self-reflection could help you refine your strategy and make more informed decisions, helping you to become a better crypto investor overall. So, dust yourself off and get ready for the next wave. And if you want to help others learn from your mistakes and avoid the zombie horde, feel free to point out the dead projects that you've come across in the comments below. Now, it's safe to say that a lot of projects die because of manipulation. So, if you want to learn about how the markets are manipulated, well, you can check that video out right over here. And if you're preparing for the impending bear market, check out that video right over here. Thank you all so much for watching, and I'll see you again before you know it. This is Lewis, signing off.